The World Bank trimmed its 2021 economic growth projection for Malaysia to 3.3% from an earlier estimate of 4.5% in June. This is the bank's second revision. It previously had a growth forecast of 6% for Malaysia. This latest downward revision is due to the ongoing movement restrictions, increased precautionary behaviour and subdued labour market conditions, which are expected to weigh further on private consumption and overall economic growth. The revised projection also takes into account the latest data, which covers the time when the Delta variant broke out, though the World Bank expects an even more heightened recovery next year as corrections will kick in. Speaking at a virtual media briefing today, World Bank lead economist Apurva Sanghi said the revision reflects the hard truth that the pandemic has been in charge for most of the year, but there have been silver linings, such as digitalization having taken off in a major way, while the country's external environment has been quite supportive to the export sector. Although this is not reflected in its 2021 projections, he said higher vaccination rates and other public health measures are enabling the economy to reopen further. This is the basis of higher growth projections in 2022 and 2023. Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz said the Bumiputra Agenda Steering Unit, or TERAJU, is in the midst of studying the Bumiputra participation requirement for freight forwarding companies. During the minister's question time in Parliament, Seremban MP Anthony Loke asked Zafrul whether the government is ready to review the 51% Bumiputra participation policy for these firms, which are finding it difficult to meet the existing equity rule. Zafrul replied there is still no long-term solution to the matter, although the Finance Ministry has twice approved the Federation of Malaysian Freight Forwarders' request for an exemption from the requirement up to December 2021 and subsequently up to December 2022. He said TERAJU will table its findings to the Cabinet to chart the direction of Bumiputra participation in the sector, as well as ensure that the industry continues to grow. Loke meanwhile said he hopes that the government will review the policy, which he said is unfair as it does not apply to freight forwarding companies, which are 100% foreign-owned. He also noted the open secret that many of the companies set up after 1990, which are on paper 51% owned by Bumiputra, are actually Alibaba companies owned by non-Bumiputra. The Public Accounts Committee, or PAC, will initiate proceedings on 25 punitive issues reported in the Auditor General's Report 2019 Series 2. Its chairman, Wong Kah-Wah, said among the issues was the U-Customs system, worth 397.43 million ringgit, involving the Finance Ministry and the Customs Department, which has yet to be completed since starting in October 2013. According to Wong, the original cost of the project was 317.78 million ringgit, but it ballooned to 397.43 million ringgit after the project was given 5 extensions of time. He told a press conference in the Parliament building that the status of the project is still incomplete, and so far the government has spent 272.99 million ringgit on it. Wong expects the proceedings involving the issues identified in the report to begin in November. He said the PAC views seriously the increase in the number of punitive issues in Series 2 of the report versus Series 1, which identified only 11 punitive issues. The Ipoh Timur MP also urged the MACC to be more aggressive and view seriously issues raised in the report, and asked that an immediate probe be carried out into all issues categorized as punitive. Public Pension Fund Coup has raised its direct stake in utility giant Tanjong National, or TNB, to 6.71%. According to TNB's Bursa Malaysia filings, Corp bought shares of the government-controlled firm in several tranches of 1 million shares each last week. This follows the emergence of foreigners as net buyers of TNB shares for the first time in 21 months. As of last Friday, Corp also owned an indirect stake of 0.67% in TNB. On Tuesday, Kenanga Investment Bank analyst Tay Kian Yong wrote in a note that foreigners turned net buyers of TNB shares for the first time in 21 months in August 2021 with a net inflow of 154 million ringgit. Month to date in September 2021, foreigners remain as net buyers of TNB shares with a net inflow of 94.7 million ringgit. Tay believes this was partly due to the return of foreigners to Malaysia's market after a change in Prime Minister, which could be signalling their confidence in the local market. However, he said it is still too early to conclude that the foreigners are finally coming back to buy TNB's stock. At 5 p.m, TNB's share price closed 0.51% higher at 9 ringgit 90 cent for a market value of about 56.53 billion ringgit. A massive vacant plot of land in Singapore owned by the Johor Royals may be transformed into a multi-billion-dollar luxury residential development. Citing people with knowledge of the plans, Bloomberg reported that representatives for the Crown Prince of Johor, Tunku Ismail Sultan Ibrahim, the land's registered owner, have been in talks with local authorities since last year for permission to develop high-end homes there. Measuring 2.3 million square feet, the land sits next to the Botanic Gardens, a UNESCO World Heritage Site, and is a short ride to the Orchard Road shopping district. The report by Bloomberg said that at 30 times the size of the White House, the project would be one of Singapore's priciest private developments for decades, and according to a Seville's estimate, may cost as much as 4.5 billion Singapore dollars or 13.9 billion ringgit to develop. If constructed, the luxury homes are said to be likely to draw interest from the region's ultra-wealthy. According to the report, the undeveloped area is currently zoned for special use of green space, so once both parties have signed a deal, the land would need to be recategorized before development begins.